Well, let's talk about let's now jump into the financial aspect of all of this. As I mentioned, you know, Joe Biden's printing $6 trillion, and now he's got a new proposal, more money pumped into the system. It's going to hire people to build stuff, but the Wall Street Journal reported that people had a decent amount of savings. People are flush with cash. They said families have cash. There's just no supply. There's demand, no supply. So if people can't buy what they want to buy, and there's nothing that's going to bring it back, why would they go start working again? If Joe Biden prints all this money and says, we're going to hire you to go build a bridge, they're going to be like, for what? I got a bunch of money and I can't buy the PS5 anyway. So now we're seeing something interesting. People with a bunch of money and nothing to do with it. And this is where we get to this story from Market Watch. A huge day for meme stocks sees Mudrick reportedly dump AMC stock, and Roaring Kitty returns to rally GameStop diehards.
What does this mean?
Yeah, okay. So Roaring Kitty, and I'm sure a lot of people might know the details of a lot of this stuff. But so I'll just briefly mention, there's meme stocks. There's, you know, GameStop, AMC, I think Kodak, Nokia, were those part of the Bush? So people started buying this stuff because memes were popping up telling people to buy it. But there was sound motivation behind it. I guess it started with GameStop. So I covered this a little bit. We talked about on the show is the GameStop rebellion. People were basically saying these hedge funds are committing are engaging in illegal activities. They're doing naked short selling. They're shorting more shares than actually exist, which is manipulating and destroying these companies, which is unfair. And so this dude's like, I like the stock, and he buys a bunch of it, rallies a bunch of people, and I wouldn't say directly. He's just like, hey, look what I'm doing. So then people were like, well, buy the stock too, and it screwed over all these hedge funds. So a lot of this ties into crypto, but let's just start from the beginning and then, you know, take us to where we got to go. What's happening right now? AMC is up 38.50. I think it's like a share of AMC. So it was at one point like a couple bucks. People are shorting it. So what's going on? Tell us what's happening.
Yeah, well, first of all, congratulations. I know there was a lot of people who were watching it today after hours. It's just continuing to go bonkers. And really, this entire group of stocks are just highly shorted ones. And it all started with this Roaring Kitty character. Back in 2019, he just slowly but surely on Reddit posted he liked it, GameStop. And throughout 2020, it really got some traction. Just the stock was doing a bit better, but people liked the size of it. Like, way back in 2019, he put like $50,000 on it, or yeah, 50,000, and he confident. And then in 2020, the world shut down, a lot more internet consumption. People started taking note of it. And then in January, it started to pick up, and that's when it went crazy. Like, he was up millions of dollars. That's just like one guy. It was just insane. And like everyone's looking at the money, and it was funny because like he was the guy who started all of this. He was diamond handing it no matter what. I think a lot of people faced with that money were like, oh, how could you not take it? And he just kept doubling up, tripling up.
So explain diamond hands. We have a shirt, but you can bring it down.
Diamond hands. It's more of a reference to really almost poker. Like if you have a strong hand, you don't fold. So diamond being the strongest thing, it's like you're just not folding. No matter what happens, technically, fundamentally, you are just not getting out of the position. And that just caught, I think it was really the perfect storm of a couple psychological events of people in 2020 hurting for money, sitting around, hearing this cool story. It was perfect. It played into that narrative that resonates with a lot of people of David and Goliath. It was this underdog, this one guy calling himself Roaring Kitty. And well, he actually has the other name, DFV. And people just liked it. They liked it.
Deep effing value.
Yeah. They liked where it was going with it. And then when it exploded in January, for those of you who haven't been following the story that closely, in late January, before we knew it, GameStop was trading sub 50, and at one point in pre-market it was above 500, and market hours it was above 400. It was going so crazy, and people were making a lot of money. So at that point, what had happened is this all happened because there was a high short interest. In the world of stocks, you buy a stock, you hope it goes from X up to Y, and you profit that difference.
So it's like if you buy a stock at 5, it goes to 10. Profit. You sell it, you get $5 profit.
Yep, exactly. So in the stock market, there is an option to do the opposite. You can sell it at Y, hope it goes down from 10 down to 3, and you profit 7. So with that, the only way to pull that off is how could you sell something you don't own? Well, you end up borrowing it from someone, and it's basically an IOU. You want it to go down, you buy it back, and you give it to that person. Well, it got so out of hand with GameStop at one point. Out of all the shares in existence, there was 140% short interest against it. So like people are like, how is that possible? How could you possibly short more of the stock than even exists.
Because like someone was borrowing it and then selling it to someone else who was then using it to like, and then someone borrowed it from him.
Yeah, it was just this never-ending daisy chain of I own it, I loan it to you, you short it, he buys it, he loans it out. It was just buying, loaning, shorting, buying, loaning, shorting, and it was just recycling, and it got so huge. And actually, what we just explained to the letter of the law right now, not a financial advisor, not a lawyer, but that's legal. That is a legal practice right there. You can do that.
Naked short selling?
That's what I just described is not naked short selling. So that's normal shorting, and that's allowed. And what it is just the amount of people are getting caught, because like when you have that much money betting against a stock, historically it does go down because it's just big money. They must know something. We must be getting it right. But once in a blue moon, there's enough people that start to pile in against that trade, and to get out of short, to close that position, you have to buy back to the market. We'll say I have a big short, I closed mine, I lost a little bit. But because I bought it to close the position at a small loss, it goes up a little higher. Well, you hit your risk tolerance. You're another short. It goes up a little higher. You hit your risk tolerance. And before you know it, it gets so wildly out of hand because all the shorts are covering.
They've got to buy the stock to cover
they hit their risk tolerance. And like, if you own a stock, your risk is technically capped if it goes to zero. If you're short a stock, your risk is technically infinite because it could just keep going up and up and up. And that's what happened when you have so many shorts. Mathematically, the ceiling just goes higher and higher for every short. And so people saw this phenomena and they found other highly shorted stocks. So GameStop led, and they're like, hey, I kind of missed that train. But all of a sudden, you have BB, Noke, Koss. And one that really, really caught people's attention, and honestly, why I'm here right now, is because of AMC. So people noticed it. And in early February, all these highly shorted stocks kind of took a breather. But at that point, the AMC community specifically, it exploded on Reddit, Twitter, and YouTube.
Why?
I think something about the point of, it was a psychology play of with GameStop, if it was trading at $200, you could buy one share. And then if AMC is trading at 10, you could buy 20. So you just felt like you could buy more, like there was more of a psychological reward, especially with a potential massive squeeze incoming. It's like, well, I'll make more money. People just wanted more shares.
What's kind of funny about that is that it doesn't matter how many you have. It matters the percentage gained.
Yeah.
You know, so if you like, when it comes to Bitcoin, everyone's like, oh, I can't spend 40 grand in a Bitcoin. It's like, no, it's a percentage gain. It's like you put in $100 and it goes up 10%. You made $10. It doesn't matter. However, when you realize that people think that way, then it actually kind of is better to have stocks that are cheaper. Because instead of thinking about percentage, the person buying is going to be like, wow, it's only $1. I can buy 10. So they actually drive the price up faster because the stock is worth less per share, or it's worth less per share.
Yeah. And with that, as the community grew, this is like they were talking about naked shorted with the first GameStop thing. But now that it's been a couple months since early February, there's been so much DD and research going on. And this is where we entered naked shorts, which is an illegal practice. So in the example of I own shares, I loan it out to you, you borrow it, you pay the fee, you short, and that daisy chains. So what naked shorting is actually when you take the short position and you never ever borrowed it. It just did not exist. So you just added more supply out of nowhere. It exists digitally, but you're increasing supply, demand stays the same, so it's driving the stock down. You just increase supply, like, so with that, and then it gets more out of hand because you bought these fake shorted shares, like people refer to them as synthetic shares because they never should have been shorted. You bought them off of him. You think you have legitimate shares. So then you loan them out to someone who actually want to short, and you get this tree root system of all these actions that should have never happened because of the initial naked short.
So the system is basically, it's got a bunch of hollow points.
Yeah.
And then what when it comes due, what happens?
So that's the interesting thing is, so the way we're using a broker, you sign up to Webull or whatever it is, you have a broker. Well, hedge funds have prime brokers, and just a fancy name for whoever facilitates their trades. So really the prime broker is the person who is supposed to locate the shares for them to short. But to the best of my understanding, they have like 2 days to locate them. Sometimes they don't, and they can even kick that can down the road. And before you know it, in high volatility stocks, there's so many trades, so much, and you just don't know how out of hand it gets. So really, they get a slap on the wrist. They're supposed to buy the shares that should have never existed off the market, and they did it. But one of the main things I kind of stress to my audience is, yeah, okay, you bought those shares off, but there's no way to get back any of the damage that was done from like the result of how long they were on the market. So
let's think about it for a second. It sounds to me like what's AMC currently short interest? What percentage of AMC is?
18%. And that's the ones that are legitimate legal shorts. Inherently, you can know there's no way to track illegitimate shorts because they were never documented, and hence why they're illegitimate.
Wasn't GameStop like over 100%? It
was at 140 at its peak.
Where's it at now?
20%. 21.
Oh, okay, so it's way down in terms of
yeah.
But if it's over 100%, then it's basically like a guarantee they're gonna have to buy your shares off you at some point, no matter what the price is.
Not a guarantee, because with that much money betting against it, usually they're right and they actually drive it down. That was the argument, is that there were so many hedge funds piling against AMC, GME, and these others. Like, there was a good chance of them forcing it to go bankrupt.
But with a whole bunch of bored internet people,
yeah,
that's a really difficult thing to go up against. It's a hive of bored people with stimulus checks, you know?
And I think that's one of the things really going against the hedge funds right now. From early February till now, the community specifically in AMC is getting bigger and bigger and bigger. The CEO, Adam Aron, was talking about there's 3.2 million retail investors, individual investors.
Wow.
And that was actually a little bit ago. So now it's just, the word is spreading. Even this, me talking here, more people are finding out about it, and it's getting bigger and bigger and bigger. So at first it was this storyline of David and Goliath, the little retail traders, but now there's so many little Davids that you almost have like a whole nother Goliath versus that original Goliath.
This is interesting. There's some questions about the security and the value of like a stock, for instance, because they can always dilute. Mm-hmm. You know, when we look at Dogecoin, for instance, the price goes up simply because it is a scarce commodity to a certain degree. Its price reflects its scarcity and the demand for it. So Bitcoin is becoming increasingly more scarce just by nature of what Bitcoin is. People want to use it because it's a safe, decentralized store of value. So the more people want to use it, the price just keeps going up. So the people are holding it are happy, and people want to get in because it's going up. And it's like a system where everyone's just like, we got to buy more, which just drives the price higher and higher. With stocks, they could dilute, and that could negatively impact you. All of a sudden, there's more shares, they get sold, and now it devalues a lot of the shares. But at the same time, it's not incredibly common that they'll just keep printing shares, right? Or it's not. They can't just do that, can they?
Well, there is a process where you like ask for shareholder approval to authorize new shares. Then they're authorized, and the board and the leadership team, when they deem it necessary, then they can do it. So like there is a certain, I guess, process that they're going to go through. But even talking about that happened to AMC today. So,
but the price still went way up.
Exactly. So it's not a definitive thing, because sometimes you're diluting or you're doing an at the market offering to raise money, and then it's the perception of the public of, did they do it for a legitimate good reason? So yesterday they sold about 8.5 million shares for around $27. They raised $230 million. The reasoning for it, and the CEO tweeted it out, was to acquire more movie theaters, expand their market share. And then today, oh, this is a whole nother weird, I guess, turn of events. It gapped up. It was strong. Midday, the hedge fund that bought it actually sold it. And they not only sold it, they did it all at once. And they did it during the market hour, which is a really, really sneaky tactic. And the reason it's sneaky is because midday, especially from 12 to 1, everyone's on lunch. It's the lowest volume part of the day.
Wow. So
whatever you do has the biggest impact. So the whole point of that psychologically is you see the jump, people get scared, they get an alert, and it causes like actual capitulation. People are like, what's happening?
Sell.
Yeah, it hit stop loss orders, it caused capitulation, and then people get scared. They're like, hang on, I don't know what's going on. One of the quickest things to drive a market up or down is greed and fear. And that's what you do. Like, so when stock goes up, you have FOMO buy. They just see it ripping, and everyone's like, I want to buy. You hop in on it. The opposite's true. Is you see a big red bar, you get scared, and because you get scared, you sell, someone else will sell. The stock market is so emotionally driven, and sometimes that could be used to a benefit, and other times it's not. But it was just so strange that they bought it at 27 like that, and then they sold it today, and not only was it a weird timing and they did it all at once, you could see the volume traded in like a particular 3-minute time frame. But beyond that, they went out of their way to make a public statement that it's overvalued. So within one day, they loved it at 27, and then they tried to drop it at 32, 33.
They're scamming the market.
Yeah.
That's what it sounds like.
And it's weird because like you'll have some correspondents talking about all these retail traders manipulating the market. How is that not?
Right.
When you know people are paying attention to it, and you go out of your way to make a public statement where it's just listened to, and that's why this is getting, they're just throwing gasoline onto the fire with this type of thing when you act that way. Because people who are on the fence of like, maybe there isn't manipulation, maybe we're overstating it, then they hear storylines like this and you're like, what are you possibly doing? Like, it's so bad. And then there's a couple of more things that play into it, but then the media reports on it, and it's always like, retail, they shouldn't be doing this, blah, blah, blah. Like, it just gets so out of hand, and it's just feeding the fire bigger and bigger.
This is what I was saying earlier on with the other segment about, meat shortages and stuff, was that it's like the system is collapsing, and they're trying to bail water, but they're making it worse. I look at it this way. They issue this unemployment bonus. Everybody's now getting extra $300. A lot of people have money from, their jobs. Not everybody was working, but people have money from unemployment and nothing to buy. So here's something you could buy. You can download an app and just buy something. It's like, what else are you going to do with it, right? Mm-hmm. So all of a sudden now, you've got this massive short interest on stocks like GameStop or AMC or whatever else. And 3.2 million retail investors who can't go anywhere, can't do anything, and are bored and are like, yeah, I'll join in. I'll buy something. Mm-hmm. So you've got this lockdown. They shut everything down. It damages the economy. Then at the same time, people have nothing to do, so they switch to this, which causes this. It's like everybody pointing a laser pointer at the same spot at the same time with like millions of people. Yeah. It's going to actually start burning, and now the hedge funds are freaking out. So it's like Biden and the Democrats think we're going to do this unemployment bonus. It's going to help people, but instead it just causes more destabilization in a sense. If people are able to, or I don't want to frame it like a bad thing. I mean, these hedge funds shouldn't be able to do what they do anyway. Mm-hmm. We had. Are you familiar with Max Keiser?
No.
So Max Keiser is a big financial guy. He's a big Bitcoin guy, and he was on the show talking about how these hedge funds they just get free money from the government anyway. The government just prints stuff, gives out the loans from the Fed, and then they can just do whatever they want with it, and it manipulates the whole system, and it basically strips the value from working class people. All of a sudden, whether intentional or not, working class people said, I want to play the game too. Mm-hmm. And now they're, firing their lasers all in the same direction. And it's causing serious problems for the ultra elites and the financial system itself, which has been stripping value from working class people.
It's just, it's exactly that. It's that like the pompous attitude of an elitist of like, I know what's best. I'm doing it right. Let me gut the economy to make millions or billions myself. And like, working class, hey, you'll be fine. Like, just, I'm right. I know what's going on with money. And they get so angry about it of like, they're using all these antiquated models of like fundamental analysis of GameStop's overvalued, AMC, we have to short it. You don't know what you're talking about. Well, at the end of the day, value is a perceived concept. If I want to buy AMC at 50, and if enough people want to buy it at 50, it's going to trade at 50. That's all it is. There's no rules. It's unsettling to some people, but it is legitimately a house of cards, and we're the ones who give it value. Enough people give it value, and that's what it's going to trade at. So,
is 18% short interest enough to actually have like a massive short like GameStop?
Yeah, so that's an awesome question. Obviously, people compare it to GameStop, and they're like, hang on, that's a lot lower. In terms of magnitude, it is considerable. Tesla's considered to be a highly shorted stock. It's not at 6%. And then you have a normal stock.
So Tesla's at like 5 something?
5.8% short.
And that's considered high.
Yeah, that's a shorted stock.
Wow.
And then a normal stock like Apple's at 0.8%. Shorting is a very abnormal tactic in the stock market. Most funds, most everything is a long only. You're buying and you're hoping it goes up. Shorting is definitely bucking the trend. So I get it. 18%, 20%. What GameStop is at now is just like, I think it's 20.6 the last time I checked.
It's like,
yeah, it's still just high. The magnitude is there because as of now, in existence, there's about 500 million shares of AMC. That's how many there are. So that means there's about 135 million roughly that are on loan that we know about that could be legitimate shorts. So what happens is if it goes up, those 130-ish million shares have to be covered for. At a certain point, they're going to hit their risk tolerance.
The price has to keep going up.
Yeah, and beyond that, their back is like they're fighting time because every single day they pay a borrow fee. But if you own AMC, you just sit there. So you pay no extra fee. You're just like, let's see how it goes.
Thanks for checking out this clip from the Timcast IRL podcast. If you want to see the full show, come back to this channel, youtube.com/TimcastIRL, Monday through Friday at 8 p.m., where you can leave comments and super chat, and we actually will read your comments on the show. Don't forget to like, share, subscribe, and if you want exclusive members-only content segments you can't get anywhere else, go to timcast.com, become a member, and we even have full bonus episodes. Thanks for hanging out, and we'll see you all next time.